Welcome back to the exchange. Stocks have been under pressure throughout the trading day as global yields rise. And now that a relatively strong earnings season is behind us, or mostly behind us, should we expect more choppy trading ahead? Joining us to talk about that, what to expect in the back half, and how to position, Andres Garcia-Amaya, CEO at Zoe Financial. It's great to have you here. Thanks for coming in. Appreciate it.
Nice to be here.
What do you make of this move in bond yields? We were just talking about it a little bit, but we haven't really dug into it. It's not just the U.S. where we've seen the 10-year and other yields rise. It's Japan. It's the U.K. It's kind of globally.
Yeah. One framework that I like to use is that when you look at the long term, nominal GDP growth and the 10-year yield do have a relationship. And the fact that if you look back even 2 years ago, the 10-year was with a 3 handle. Right. There was, in essence, fundamental reasons for yields to rise. In the short term, there might be a lot of noise, but you still have nominal GDP growth with a 5 handle, and you have a 10-year yield with a 4 handle. So I think there is still fundamental reasons beyond the noise for it to continue to go up higher.
So it sounds like good news. The only problem is if a lot of that N is inflation instead of real growth. And so I'm curious how you see that playing out. If it's, okay, if the mix is 4% real growth, 1% inflation, we're happy. If it's 1% real growth and 4% inflation, that's a nightmare.
Right. So if you ask a bond investor versus a stock investor, they might give you different answers, because I do think that if the economy holds up, it doesn't have to be gangbusters, you will continue to see corporate earnings deliver. I've been really impressed with corporate America and how resilient it has been. Now, the question of if inflation is 3 versus 2, bond investors might look at that very differently. For stocks, I do believe that if inflation is 3 or 2, that's not the big question, is can earnings continue to deliver? Can the economy not hit a recession?
So stock investors don't have to care as much.
Exactly.
And I forget who it was on this program a couple of weeks ago who said they see almost stock valuations and the U.S. stock market is becoming untethered to kind of U.S. economic conditions in some way, maybe because it's multinational, maybe because they can benefit from the N and N GDP, I don't know, but that it kind of has this feeling of a disconnect. Is that too strong, do you think?
I to a certain extent, I think it's just so moldable, right? You got to give it so much credit at its ability to, companies' ability to pass on that inflation, for instance, to the consumer, use operational leverage. I mean, AI is becoming a play that is just beginning, and the U.S. tends to be kind of in the forefront of that. So there are structural reasons for it to continue.
Commodities would certainly kind of confirm the story of decent NGDP, strong inflation, like that kind of mix of things. Do you think that's what rising commodities, rising bond yields, is all of this kind of telling us the same story?
Yeah, I think it is a combination between demand, stronger demand, and some inflationary pressures. But yes, there's been noise to inflation, but it has been coming down, right? I think I would be concerned if we had, a year of data showing, hey, this is not only sticky inflation, it's reaccelerating.
Rising, sure.
We're not quite seeing that.
We've seen a little bit in the first quarter, but probably not enough. So I guess you go back to, okay, we just heard from B of A's technical strategist. Admittedly, it's technical. He's looking at the charts, but saying maybe it's 3.25 on the 10-year. Yeah. As the next kind of big move later in the year, the unemployment rate starts rising as it's gradually been creeping up. Is that possible? Is it possible that just at the moment we're coalescing around one version of events that has high nominal growth and sticky inflation? Are we going to turn around in 3 or 4 or 5 months and all of a sudden be telling the macro slowdown story that, we keep waiting to tell?
I mean, look, it's you should never say never on these things, but I think you would need a pretty big shock to see something like that. When you look at economic data, when you look at earnings, when you look at essentially PMIs as well, there are parts of the global economy that are actually starting to show signs of life instead of actually downside. So I wouldn't say never, but I would have to see something pretty large outside of what's happening right now to see that.
And I like what your point about how the way that markets have behaved and the way a lot of financial conditions broadly have kind of loosened. It's almost as if we've had a Fed rate cut. I mean, Some of the Fed officials have been talking, I think Kashkari, quite a lot about this, listen, financial conditions are easing, and that's something that they have to consider.
Yeah, I think that this is great. The markets near all-time highs are great news for the Fed because it gives them cover to re-anchor the communication around we could hike or we could cut, right? They were using that language last year, and then they went into when will we cut? And I think they were nervous about opening the door to actually we might not cut anytime soon because the market was getting jittery.
Right.
Markets near all-time high gives them that opportunity. So I would not be surprised if their language continues to change towards a little bit two-sided. Hey, we could go this direction or this direction, even if they're tilting towards, cutting in the quarters.
So for the back half, where does that leave you? Are you just staying long stocks, long the kind of, the Mag 7, for lack of a better word, the whole, just kind of simple, keep it simple, or are you doing anything different here?
I think that overall, the reasons why the market's rallying, I think, will continue, which is earnings, right? When you look at different sectors, sectors like financials, sectors like utilities, think about it kind of like value momentum, because some of them have actually started to perform well, could do well, especially when you see this breadth of market performance continue to wind out. Interesting.
Value momentum. This is the hope for the value trade, at least in those areas. Andres, thanks so much. I appreciate it.
Thanks for having me.